All right, what's up, everybody? How's everyone doing here this afternoon slash evening? How's everyone's Thursday treating them? What's up, Tony? How you doing? Hey, it is Friday. Yeah, absolutely. Oh, my pleasure, Kath. Glad we could get that fixed. It's been a uh chaotic, complicated, confusing nightmare getting all these issues sorted, but I think I mean, fingers crossed, in the weeds or out of the weeds. How's everyone's feeling? Hey, my pleasure, David. Glad to help. Apologies, guys, for all the issues with that. But we've rewired a bunch of things, and so hopefully they don't change the API on us here anytime soon. Oh my God, what a nightmare. How's everyone feeling after today's awesome trading day? Pretty good session, right? Yeah, I think we had a good vibe in the room here today. It was really good. Makes quite the difference, right? And it starts with me, but when we practice gratitude, I think it makes a big difference. Super easy to get very negative very quickly. I'm very guilty of that sometimes. So I think it's one of those things got to lead from the front. Love that, Das. Hey, stack up those base hits, Michael. That's a great day. It's always fantastic. So, who wants to kick things off? Who's got the first question to get this session rocking and rolling? So, what do we got? Who's got the first question here today? Yeah, fire away, Darren. Let's go. Yeah, so I think it's just a combination of things, Darren, right? So I think this the starting point there, at least in my experience, and I think we've all experienced this sensation in some facet or another. But generally, when I feel like it's time to enter a trade, I'm usually still early on that idea, and I can usually get a better reaction. It's gonna be better if we show this with live markets here. So let's go electronic. Let's go 1 min just to exact. Let's go 30 seconds just to exaggerate this here a little bit. Obviously, you would never trade the 30-second, but let's say that I'm setting up an entry and it looks something like this for a long. Obviously, this is not an active setup, right? The core idea here is that I basically want to buy my stop loss, right? So what I'm looking for is for price action to make a move under 682.75. And then when it bounces back up above that red line, right, or where that red line would have been, or approximately that red line zone, I kind of have an idea that the fake out has happened. So if I was watching this now, right, and I'm looking for the fake out, okay, now let's see if it goes under. And it did, right? So then it goes down to 81.75. And it's once it bounces back up above to what that 82 was, then I'm starting to feel confident that that 81.75 is my low, and I can look to make that purchase, right? So that's effectively what I'm looking for. Now, obviously, 30-second time frame, I'm not going to get a tremendous amount of confirmation here, but that's effectively what I'm looking for. I'm trying to delay my initial decision because I'm usually early on my first impulse, so why not wait? And then when I see a fake out, I'm basically looking for it to bounce back above where my reference price would be, or what the previous low was, or what the previous high was, something along those lines. So something to indicate that there's like a bit of a failed breakout or a bit of a failed breakdown. And then once I get that combo of information, I'm pretty confident that my idea is going to hold. And then the entry price, right? Entry price is always 10 points away from stop loss location. $5.13. So you're asking a little bit BXT. I'm a little bit confused by your question. Could you rephrase it? Yeah, spot on, Michael. Like I say this a lot. But like if I thought I had an edge trading in the afternoons or trading after my quote unquote kill zone, I would trade, right? It would make me more money. But unfortunately, the only evidence I have is, and I haven't done this study in a while, but the last time I did it, the only evidence I had is that I ended up spending another 5 or 6 hours streaming to make like a net 15 points on the year. It's like it wasn't really worth it. So it was like a lot of mental capital, a lot of energy, a lot of exhaustion for basically nothing, and that kind of sucks. So for me, it's just not worth the energy. I also think that there's a certain element of like optimizing for freedom. You know, it's a little bit depressing to, you know, make all this money and you know, making like $2,000 in the morning and then saying to yourself that isn't actually enough. So like, you know, if I think about if I was like an 85-year-old man and I was looking back on my life on my deathbed, hopefully I'd be older, but I'm looking back on my life on my deathbed, I don't think I would ever regret that I didn't spend 20 hours a day trading. So if I had all this freedom and I had all this flexibility and I chose to spend all my time in front of a screen, I reckon I'd probably regret that at some point, right? Like there becomes like diminishing returns. What I have found is that by protecting more of my mental capital, by being a little bit more aggressive in when I cut myself off, I trade better. I come back fresher. I don't get as burnt out. And yeah, like I would probably rather be trading than doing some of the other stuff I do, like, running my business and things along those lines. But you got to play the game in front of you. You got to stick to your rules. And I had, very limited evidence that trading longer was actually profitable. And most of the time, markets kind of just chop around and do nothing between, let's say, like 11 Eastern and 2 Eastern, and then they kind of kick back up a little bit. So it ended up being something that wasn't really worth my time. So Scott, it's a great question. I think there's two things that I focus on my entries. So one, right, the reference price. It's called the reference price for a reason. So it's so that you guys can visualize where my entry zone is, and that should be like your trigger for entering your positions, or you should be looking for your entry within that 10-point range. Once it's actually inside that 10-point range, I'm trying to do two things. So I'm trying to buy or open my position, I should say, just to keep it flexible here. I'm trying to open my position as it's moving towards my stop loss. So basically at the point where it feels scariest. And then the second thing that I'm looking to try to do, which is a little bit less objective, it's a bit more subjective, is I'm trying to click that button when I feel a moment of calm. So that moment of calm is going to be influenced by a cajillion different things. So it's not the most consistent of things to look for. But what I'm trying to do is making sure that when I click that button, I'm not starting it with like a cloudy or foggy or hazy memory or hazy brain. I want to be not reacting emotionally when I click that button. So technically, I'm watching for it to be moving closer towards my stop loss so that I can buy a discount relative to the reference price. And then as I'm trying to find that discount, I'm trying to find that moment of calm where I can click submit without feeling like I'm chasing it. And that's the moment of calm thing, right? That's not something that I get 100% of the time, but that's the thing that I'm working towards always, because I don't want to make an emotional decision or be entering a position based on an emotional trigger. So if I can kind of hedge myself against that, then generally I feel a lot better. And if I get stopped out, I tend to not have a super bad reaction to it. If I get a good follow through, then generally I can maintain more of my mental capital and hold out my position for the remainder of the move. So 10:04, 10:02, 10:04. Yeah. So, I mean, on this setup here, right? So if I'm going back to what it looked like, this is kind of a bit of an exception, right? But if I'm looking at the setup, so this is 10:02, this is 10:04, and this is my confirmation candle, and I'm looking for the fake out. Realistically, right? I've seen price action stop here. So the difference between putting it at 73 and 65, it's pretty negligible. So I would rather just default to a more conservative stop loss than too aggressive if the difference between the two prices is small, right? Now, if this gap was like 60 points, then yeah, I'd put it at the low of my entry candle, but that's a little bit of an exception there, just because both of these candles low are so similar or so close to each other that it's worth keeping the one that's like rounded down. So if we were to play a downside move here, we had this set up on the 3, right? But didn't get confirmation until 9:54. So we're playing it from the failed breakout here to the upside. If it continued, right, our next then setup would have been a breakout through the opening range low, which is approximately 457. Does that kind of make sense? So because we never had the breakout through low a day, pretty much the only bearish setup that we had today was the reversal, right? Once price action got extended. But today primarily was a bullish trend day. Yeah, confirmation is the increasing volume and it's the candle shape. So I want both the candle to tell me it's strong and the volume to tell me it's strong. If both of those sync up, I kind of feel like I've got two kids in the principal's office telling me the same story. What else we got here, team? Any other questions? Yeah, full body, right? For me to define a strong candle, like the way I like to visualize this, and I'll get to you in a second here, Darren. The way I like to visualize a candle is like to visualize it as an arrow. So if I were to look at a candle, is the arrow pointing up or is the arrow pointing down? If I'm bearish, I want the arrow to be pointing down. If I'm bullish, I want the arrow to be pointing up. Now, something like this, right? Like this candle here at 9:45, that's not a down arrow, right? Because the body's so big. But something like this 10 a.m. candle, right? That kind of more looks like an arrow pointing down. So that would say, hey, maybe not the best confirmation type thing. All right, 2 min looks much better. Very, very full candle. Like of all the candles from say like 932, only this 938 on the 2 min would be an arrow pointing down if I was looking at it from a bullish candle perspective. And I think the arrow thing is pretty easy to visualize, and we can all see that. So it makes a big deal. All right, Darren. So good question. My rule this week was if first trade of the day is green, I'm done for the day. If second trade is red, I'm done. Today I had 1 out of 3 trades. First 2 small losses, then ended green, but I felt conflicted because I broke my rule. So great question. I think it's twofold, right? One, I'll ask follow-up questions before I give you my answer. One, what's your max loss on the day, right, that you're willing to accept? How much were you below that number? So that's the first question in 2 parts. And then the second question is, what made you feel as if you should continue trading that session? Was it just the enthusiasm I had? Was it something else? Like what do you think pulled you in that direction? And while we wait, right? So this candle, arrow pointing down, right? This candle, arrow pointing up. Kind of see that? Does that kind of make sense, Michael? See what I mean? And then like this candle, maybe pointing up. This candle pointing down. This candle pointing up. This candle across, so kind of a nothing. So I think it's twofold then there, Darren, right? A 15-point loss, you're still 25% less than your total max loss that you're willing to accept with those 2 trades. So from like a risk management perspective, I wouldn't say that you necessarily did something wrong, but I think your conflict that you feel in your mind is also valid, right? Because if we're making decisions and we're kind of like predetermining, hey, these are my rules of engagement, and then we break those rules, it just becomes a little bit of a slippery slope. So what I would challenge you to say, right, or to think is how would you feel if that third trade was red, right? Hey, you're good, Michael. You're good. Um, and if you would have felt like double pissed about the third trade of the day being red, then you probably broke a rule. If you would have been okay with it, then you probably would have been fine. So I think it's a little bit of both. I wouldn't say that it's necessarily one over the other, but that question or that answer lies internally versus externally. Now, I would always suggest that we delay that gratification, even missing out on a green day, which you did a very good job of getting here today. There's probably more value in just like learning how to trust yourself and to behave within the context of your rules. And that will compound more than today's green action ever would. But there's also value in fighting through some challenging price action early and finding your rhythm and your routine. We talked about this. Honestly, days are blending in, so bear with me. I can't remember if it was Tuesday or Wednesday. But I don't know why I can't remember. But we want to be like, we want our actions to match our words. And when we deviate away from that, like it can feel really good in the moment, but the days that it doesn't work out, that can often trigger like a tilt event. And so the more we can control those actions, generally the better things go. So my first trade of the day was this initial breakout here at 944. That's my first increasing outlier volume candle on a breakout above high a day. So setup here was a breakout through 622, targeting 700. And so it kind of looked something like this. And I got stopped out on this trade. So setup was a breakout through high of day, confirmation, increasing outlier volume, strong candle shape, little fake out, and then, I think my entry was around like 655 or something. Realistically, probably no, right? I think I could have made money maybe just on like a good entry and able to get like a bit of follow through, but realistically, this trade didn't move up to 700. It made 1, 2, 3, 4, 5 lower lows before it turned around. So I think, realistically, Scott, this was just a setup that I was not going to make any money on, and that's a part of the game. Everything can look absolutely perfect, and you can still lose money. Everything can look absolutely dog shit, and you can still make money. And so it's like, I'm not solving for 100% here. I'm solving for 60, 70%, and I'm happy with that decision, all things considered. Yeah, good question, Mandy. So if I miss my entry on the 2-min time frame, would I switch to the 3-min? And if the 3-min does not show the same confirmation setup, etc., as the 2-min, would I look to jump in anyway? No, I would not. If I move to a different time frame, I still need to have an independent setup trigger, which I should have because it's a high of day breakout or an opening range breakout. But I also need to make sure that I'm matching my setup criteria. A failure to get an execution or a confirmation on one time frame doesn't mean I can compromise on the next. So that's kind of the whole point. If I then can't get the confirmation on the 3-min, I'll switch it to the 5, right? Or I'll look back to the next 2-min candle and see if that gives me the look that I'm hoping for. But compromising generally doesn't work out too well, in my opinion. I'd prefer to be stubborn than trapped. I'm sure it could, Scott, right? Like, I'm sure it could. The problem I have with the 1-min is it just starts to get a little bit noisy. So you just get a lot of signals and you get a lot of just a lot of noise. So I've not really felt the desire to trade it on the 1-min. I don't know if it's worth the energy. Like, I kind of go back to this a little bit, but if it's not broken, you don't need to fix it. And I feel like I get more than enough opportunities, more than enough follow through, plenty of action trading the 2-min and above. So I don't really need anything else. But like my strategy, guys, it doesn't work because like the opening range breakout, some holy grail. My strategy works because of my risk management, right? It's constantly just getting those tight risk reward scenarios where I have asymmetric upside. That's all it is, right? I'm playing heads or tails, but every time I get tails, I make $3. Every time I get heads, I get 1. So I'm not really too fussed on I don't feel like I need more action. I can get the asymmetric upside that I want on my time frame, and that's fundamentally what makes me profitable. I'm sure I could execute those same concepts on a 15-second time frame, let alone a 1 minute. But at some point, I think it's also valuable in just like forcing yourself to slow down, not get a million trades in a day and burn out all your mental capital. So there's like a little bit of a compromise and maybe a little bit of a sweet spot for myself personally. And that's the way I like it. When I traded institutionally, we weren't allowed to trade on like within the first 5 minutes of market open, right? So kind of just always been trading quote unquote longer time frames. So there's a little bit of survivorship bias there. I'm pretty stubborn. I'm pretty set in my ways. And so I have minimal incentive to change. Yeah, good question. So is it me when I answer my 3 questions, is it me, is it the market, or is it my strategy? I generally like to do reviews. So like, is it me? That's a question that I can make changes on a daily basis, right? So was it me? I can look at that on a very short time frame, effectively day to day. Was it the market? That's something that I kind of reflect on a week to week basis. And then was it my strategy? That's something that I kind of reflect on like a month to month, maybe quarter to quarter. Generally, what will trigger a deep dive into my strategy or the market is if I start to notice a pattern repeating itself for 10 days, 15 days, right? Something along those lines. The most recent change that I've made, was almost a year ago, I guess, at this point, where I started trading the fake out entry. And it was basically because last summer I kept getting the direction right, but I kept getting stopped out before trades would move. So that then became a question of my strategy, right? Where my stop loss location wasn't where it needed to have been. And so just adjusting that technique, ultimately made a very, very big difference. And if I make that correction on a day-to-day basis, I'm probably making too many changes and I'm not allowing variance to kind of, play out. But if I look at it from a slightly longer perspective, I generally have a better sample size and a better idea of what's actually going on. Well, no, I just have it turned off, right? So, just in my inputs here, I just have a bunch of stuff not ticked, right? So I could put the bullish breakout stuff in and I could get those scenarios, but like I know what I'm looking for. So for me, it's not super valuable. The reason I coded those up into my indicators when I was doing my back test, I just wanted a really easy visual way that I could look back and see something. And it kind of has a secondary benefit of when people load up the indicator in their trading view, they can see what my setups are. Like I don't feel as if I ever misdiagnose a setup, right? Like I don't feel like I ever miss setup triggers. I feel like I have that part of my muscle memory, pretty down packed. Truth be told, so I don't feel like I'm ever missing something. And Scott, don't apologize for the questions. This is what you're here for, right? So if no one else is going to ask questions, please fire away. Well, I'll answer them all. What else we got here? Team, any other questions? You mean like this red line here? Yeah, those are just my profit target lines, right? So it tells me where I'm looking for a breakout from the opening range. That red line is just 2 times whatever the size of the opening range is, right? So the opening range here is 45.5 points. So if I were to take and I'd be super precise with it, this will be 91 points away from the high of the opening range. So it's just because my profit targets, right? It gives me one less thing to worry about. Profit target's always visible. And then if we're above that red line, right, then we start targeting the numbers that we come up with in our pre-market prep. No worries, Tony. Not to be a Debbie Downer. What do you think is causing the poor trading performance? I think Brent, our stop loss is 10 points or less on NQ, and it's nearly a 30,000 point security. So we're going really, really tight on our risk. And kind of the objective here is that we're either going to be right away or we're going to be stopped out right away. I think that that's better than being stuck in a torture chamber of will it or won't it. I don't really want to get friend zoned by the market, right? That I think is not something that's enjoyable or particularly profitable. As a trader, we don't get paid for being early. So I would rather take a small loss, get out, shake it off, right? And try again. I don't need to put all my eggs in one basket, and that makes a big difference. How are your exits, Tony? So you're saying you're within a few points of my entries and my stop losses. What about your exits? What's the average size of your win? What's the average size of your loss? Yeah, that's not the answer to the question, right? So you had 4 losers yesterday, 4 losers on Tuesday. I think there's a couple things that stand out, and I'm looking at your account. The spread between your losses is pretty inconsistent. So there'll be a lot of trades where you're losing like 300, 350, and then others where you're losing like 175, right? That type. If I'm looking at your day on Tuesday, you've got 2 losses of 300 plus, one of 165, one of 200. Like the spread or the dispersion around your risk management's a little bit inconsistent. I would try to get that number to be as similar as possible, right? Like you'd want every loss to be $200, $250, right? Very consistently. Because when I look at some of your winning positions, I see like $1,500 wins. I see $1,600 wins. I see some pretty good P&L on those trades. So what it tells me is that either your entry timing, right, is causing a little bit too much variance. And then I think that then complicates things, right? So if like one trade is double the size loss of your average, just makes it really hard mentally, right? So I would say try to get that spread to be a little bit tighter, and that will make a big difference in your variance. And then the other thing to focus on here is I think you probably need a strikeout rule. So like on Tuesday, you took 4 trades. If you took 3, you're losing 25% less than what you did. And just stacking up and compounding a few of those days will make a big difference. So I'd like to see you tighten up your entries a little bit. Maybe for you, it's like reference price should be 8 points instead of 10. Maybe it's 7, whatever it is, but try to make that process very consistent and then constantly just focusing on closing as your P&L is increasing. And once you are having a bad day, which we will all have, right? It's inevitable. Find your walk away number. Something that Darren was talking about here that you might find to be quite useful is if your first trade of the day is green, you're done for the day. If your second trade of the day is red, you're done for the day. I want to see a little bit more of a proactive approach to your risk management. What else we got here? Team, any other questions? Yeah, Scott. So, like I said, right on the pullback, there's two things, right? So, I'm watching for price to move towards my stop loss, and I'm looking for that moment of calm, right? So, I don't want to feel like I'm ever chasing my entry. I want to be clicking submit when things are feeling smooth. So, there's a one part of it is an objective element, right? Buy as it's moving towards my stop loss, not away from it. And then I want to be clicking that button when that moment of calm syncs up with price action moving towards my entry. That moment of calm is not objective, it's subjective, right? It's unique to each of us. So that would be the thing to focus on. Hey, Brent, appreciate that. Thank you. Glad you have the facts you need to make good decisions. That's important. And hopefully, you guys, there's a lot of questions about this. Hopefully, we'll get the volumetrica platform integrated here into the DTR website, so that people who are trading there can upload their stats to the website and be a participant there. So 2 p.m. Is that Eastern time frame? What time? Like Eastern time zone. Sorry, Kath. Kind of looks around here, right? So I would say that this would not be a reversal setup because there's no failed breakout above high a day. So if I'm playing a reversal, I need to see my setup trigger make a failed breakout above, in this context, right, 783. If it made a wick above, so let's say that it looked like that, then yeah, that's amazing volume. That'd be a great signal to the downside. But the thing that's missing here, right, is there's no active setup trigger, because if I'm playing a bearish reversal, I need to see a failed breakout above high a day. Any other questions here, team? What else we got? I'll say this while we wait. Had a relatively symbolic session after today's, or symbolic walk after today's session. Walking the Valley Trail here around where I live with my dog, and I kept dodging bear poop. And it feels like it felt like it was matching the market so much, because bears kept trying to take a little dump and tried to dodge it, and the markets were ripping and roaring again. So kind of felt like the markets and my walk were kind of the same thing here today. Oh yeah, absolutely. Same here, right? Bulls are bullish, right? The upside, bears are bearish to the downside. So playing that same game. I love that little park. My local, just right around the corner. So beautiful in there. It's so peaceful. What'd you think of the ad? Good, bad, ugly? That's because you made the mistake of clicking on it once. Yeah, I appreciate that. Thank you very much, Kathy. All of your guys' support does tremendously. It means a lot to me. I really do mean that. Oh, I mean, pretty hard to sell my lifestyle. What do you mean you wake up 5 o'clock in the morning and work till 10 at night? Yeah, fair, Michael. That's fair. All right, so 1226. Yeah, like for me, right? The problem here again, no failed breakout above 783, right? So these candles individually fine, but there's no active setup trigger here. All right, so it's just volume separating away, but I need the failed breakout above high a day. So high a day here, 783. There's no failed breakout above that blue line prior to it pulling back. So that's the missing ingredient more than anything else. So it fails right at the first opportunity it can to be interesting. I enjoy Brent. Such a good puppy, Ricky. He's such a good puppy. If AI ever gets really good, I'll start getting my dog to do my ads for me. I'm going to go final call for questions here then. Final call for questions. I enjoyed Darren. What? Mm, I don't think so. Like I think it will and it won't. It won't replace you. Won't replace us in the way that maybe people think. Because trading is fundamentally a zero sum game, right? So for every winner, there's someone who lost money. Um, so I think fundamentally there will always be an edge. The thing that, yeah, like the thing that's worth understanding, right, is that as retail traders, we trade very differently than how institutions trade because our biggest advantage or our biggest edge is that we can get out of our positions and into our positions when we want, how we want, basically whenever we want. When you're a big fund or a bank or something along those lines, you're not going from 0 to 100 million to then back down to zero. You're basically managing a rolling portfolio. So let's say that we're going into, CPI or the fund has some sort of thesis. They'll set their position across like their entire portfolio. So you'll be net long financials and maybe net short pharmaceuticals. And that's what like your pattern tells you to execute. And so AI is very helpful in those tools. But algorithms and algorithmic trading has existed for 20 odd years, at a very, very high competitive level. And so all these banks, all these hedge funds have already been using these machine learning concepts and these ideas. AI, when it comes to retail trading, I think will make it easier to potentially find or backtest concepts. And maybe in a few years, it'll be easier to basically automate your execution. But fundamentally, we're not the whales. We're basically like the fish that swim alongside whales and live off of that ecosystem. So there will always be an opportunity to take advantage of that slippage or that backwash and get full effectively, right, with how we're trading. And so I don't see that edge evaporating, but it might make, execution or diagnostics a little bit easier. So good absorption would mean that we have a lot of volume, but minimal price movement. The risk management feature will basically email you or text you when it notices you doing patterns that lead you to losing money. It's effectively a tilt detector. Truth be told, guys, like with the ads, and I appreciate everyone's feedback here, is I pay per click. So getting impressions and showing it to people doesn't really cost me anything. It only costs me something when people click on the ad. What AI does, Kathy, and I think you're spot on, is like I think AI makes information very democratic. It's now accessible to everybody. So, the informational edge that big banks and hedge funds had, the $100,000 subscriptions that they'd pay for their data or their reports, that industry has basically been wiped out and been made available to everybody. All right. Any other questions here, team? Any other questions? No, just the coaching tier. But the coaching tier is the cheapest one when you apply the discount. 40% off, everything else is 25. No, my pleasure, Kathy. No call tomorrow, right? Fridays we won't do them, but Monday through Thursday, between an hour, 90 minutes, depending on however many questions we have, be happy to fire through. All right, team. Well, if no further questions, I'm going to kill it here for the evening. Go get some rest. Have yourselves a great rest of the afternoon or evening. We'll see you guys all in a couple of hours for the stream tomorrow, and we'll catch up then. So have a great one, and we'll talk soon.